Welcome to the morning market briefing. Today is February 15th, 2023. I'm here with Harrison Pettigrew. He's filling in for Andrew and Ben today. Ben is on a flight, and Andrew is putting out fires as usual. So Harrison's going to fill in, give us a little color on some of the action this morning. Kicking it off, let's talk about the CPI postmortem. So yesterday we came in hot. Initially, markets were pretty flat. Bonds were up. And then as soon as the market opened, stocks were down, bonds were way down.
Yeah.
But we seem to be in a situation here where the markets are shrugging this off. Basically, we saw the market continue to rise throughout the day. We saw bonds settle roughly about where they started for the day. And we're seeing expectations on rate hikes start to tick up. In fact, Deutsche Bank came out this morning and said that their terminal rate now is 5.6%, which would be a full 1% higher than where we are right now. So the question is this market very strong? Is it that the market is now starting to digest the fact that rates are just going to be higher for longer? We look around, there aren't a ton of companies that are just getting absolutely waylaid. There are plenty of companies that seem to be thriving. Is this just going to be the new normal? Is the market strong enough just to sustain a level of higher interest rates for the first time since, call it 2008?
Yeah, I don't know, man. It seemed yesterday was some weird trading behavior. I mean, it was down, then it went up, back down, then kind of rested flat. So I think the market's just grappling and just digesting this information. Where we go from here, I think the retail data will be a big indicator for us. And I think that will sort of guide February, the rest of February. Because we saw a huge rally in January because everybody just thought the Fed's going to cut. And now we're kind of sitting here. Maybe the market's actually strong. Maybe the economy's strong. And the Fed's going to stay by the guns.
Yeah, I think that's the way we're going. I think we continue to see rate hikes. I think if you look at futures now, we're looking at 2 for sure and probably 3 now total, which would take us above 5% for the first time as long as I can remember. And I think, given the information we're about to get this morning, the retail sales number actually did just come out. And so to give you context, last month, it was a positive sign. We saw retail sales decline by 1.1%. And the expectation for this morning was actually that they were going to accelerate by 2%. And we actually came in at 3%, which is a very strong number, especially given the fact that we've seen such a hike in rates, and everyone is expecting this disinflationary environment to continue to progress. After the CPI number, now we're getting a pop in retail sales. In fact, X auto was up 2.3%. X auto and gas was up 2.6%. And so, even though we saw the Manheim used auto index tick up, it seems to be almost irrelevant. People are spending money. I mean, the big takeaway, I think, yesterday from the CPI report was the apparel being up 8%. So are people buying? What's the
I think it has to do with vehicle services. So if you break down the CPI report, transportation services were up 14.6%. On an annualized basis. And that was mainly from motor vehicle insurance and maintenance repair. So that could be a portion of it. I don't know.
Yeah, it's an interesting piece. Perhaps people are less inclined to buy cars, but they are inclined to keep the ones they've got going.
Yeah.
And so what we're seeing here is
maybe apparel too. I mean, apparel definitely ticked up as well.
Yeah, apparel was up almost 8%, which is a strong move considering we've seen all the inventory problems at places like Target and some of these retailers where they just had a huge build. People weren't buying apparel going into December, and then suddenly, they're unloading that stuff and the prices are going back up. So this is definitely another, I would say, crack in the narrative that inflation is coming down rapidly. Just seeing such a massive uptick in retail sales. I mean, that means people are out, they're spending. The more spending and more demand there is, the higher prices are going to go. And the more action we'll have to see from the Fed. Right now, we're seeing quite a bit of selling on the fixed income side. We'll have to take a look at futures here. We're a little bit delayed on futures, but I'm sure that they're probably responding in kind with this number. I mean, this is a very, very strong number on the retail sales, much higher than expected and way higher than last month. Let's see, moving on. Next piece, Elon Musk announced this morning that he will name a new Twitter CEO by the end of the year. He said, quote, "I think I need to stabilize the organization and just make sure it's in a financially healthy place. and that the product roadmap is clearly laid out, adding it should be in a stable position around the end of the year. And he expects Twitter to break even this year. So this comes off the back of he's going to do revenue sharing with content creators, more of almost like a TikTok model in terms of who gets paid off of the revenue generated by Twitter. And the idea there being drawing more content creators, more people who are driving people to the platform. They obviously notably made their first debt payment a couple weeks ago. The question is this positive for Tesla stock? And we saw Tesla really plummet when everyone was questioning, can he afford to buy Twitter? Can he afford to run Twitter? Is he paying any attention to Tesla? We've seen a pretty strong rally on the stock over the last month or so. I think it's up about 100% down. It got all the way down to 108. It's a little over $200 now. What does this look like for Tesla, in your opinion, Harrison? Do you think that this is good news, bad news?
I'd say this is an absolute positive because Tesla shareholders, and us in particular, we've been worried that he's not giving any time or attention to Tesla because Twitter. I mean, you see him, he's posting on Twitter all the time. He actually had some funny posts last night about the board for Tesla, his dog and his son.
Oh, nice. Which one? He's got like 15.
I know, it was the oldest, I think. But I mean, it definitely creates confidence because we need him back at the helm at Tesla, and Twitter's definitely been taking his time away from there. So I think this shows that he's taking steps. Now the timeline I wish would be a little bit sooner. It seems like he wants to create stability first. I would argue that he should just get a CEO in as quickly as possible, a guy that he trusts, that he can focus on Tesla. But I mean, this is more positive than negative for sure.
Definitely. And there's also, I don't know if this adds some murkiness to that narrative, but there's been rumors flying around that he's trying to take a medium-sized stake in Manchester United along with the Qataris. Someone was floating the number around somewhere between $5 and $10 billion stake if Manchester United is going to trade hands. And that would be, I don't know if that would just be more chaos, but Elon Musk loves chaos.
He does.
So I don't doubt that there's actually some real truth to those rumors. Speaking of Manchester, sort of Manchester adjacent, the country of Scotland, international political turmoil. Nicola Sturgeon had a surprise resignation overnight. Sturgeon is the prime minister, the head of the Scottish National Party, and has led the country for 8 years. And really, it all comes down to a very controversial gender recognition bill. It's been, I guess, a massive point of contention. Think back to the North Carolina bathroom situation of 2014, 15. Not to get too deep into the politics of that, but it's viewed as being very unfavorable in Scotland right now in light of the fact that they've got obvious economic turmoil, very high inflation. They really need to focus on righting the ship from an economic standpoint. And this seems to be one of the major talking points for the government at this point. And so Nicola Sturgeon stepping down. I was looking at the, who's most likely to take up. There's a finance minister. She's currently on maternity leave that has, roughly 7% of the party support. And that would be the leading candidate to replace her. But this is a big hit to the nationalist movement there. She was basically one of the big spearheads for trying to have Scotland break free of the UK, sort of a la, the regular Republic of Ireland as opposed to the Northern Ireland, and having their own sovereign state. There's been a big erosion there in terms of people who really want to do that. And I think this might be the nail in the coffin, at least for this decade, in terms of Scotland breaking free. But any potential ramifications you think, Harrison, that might come from this, politically, economically?
On the extreme end, I would say, and I don't view this as a likely scenario, but on an extreme end, it shows Scotland really pushing the narrative to separate more. I think the Scots are going to be upset with the fact that the UK government just blocked this bill without. I think the method by which they blocked it was less than desirable. I don't even think they gave the Scots a means to express themselves why they were pushing for this bill. I forget the exact mechanism they went through, but the Scots are a little upset. And so I think this could create further tensions. The bill, it did kind of make sense why it was blocked. So I wouldn't argue that. We don't have to get into the politics or anything. But I think it was just the mechanism that's really.
So for context, my understanding of it, and Ben would be better here because he's an actual Scottish person, but my understanding is they passed the bill once it passes the Scottish Parliament, it basically moves up to the UK level where they basically give it a green light or a red light, and they send it back. My understanding is that essentially the mechanism of the bill was that you can basically go to the government and basically fill out a form and say, this is my identity. And you can be whichever gender you choose to be. And there's no medical or psychological or any other piece.
Essentially, a guy could say, I'm a woman, and then go to a woman's bathroom.
Yeah. So the hang up is not necessarily that they're against the changes. It's functionally the California weed card system of 2000.
It was poorly written.
It's poorly written. Yeah. And so my understanding is the reason it was squashed is because it's poorly written. But the biggest piece is that Sturgeon herself, the people of Scotland are not real concerned about getting it through at all. What they want is, they want the economy fixed. And so it's just a mess over there. So I'm excited to get off this topic, but it is in the notes per Ben. So he wanted to make sure to hit on it today. The last big one is Analog Devices, ADI, which is a very widely held Narwhal universe stock.
Quintessential Narwhal stock.
It had unbelievable earnings. They came in, EPS was expected to be $2.60. They came in at $2.75. And the guide was actually $2.50 to $2.70. So they were above even the high range of the guide. They beat on revenue, $3.25 billion versus $3.15 billion, again at the high range, 21% year over year. They were up on industrial chips. They were up on automotive chips, up on communications chips. They did see a little bit of a slowdown in consumer, which would probably, I would guess, have to do with the fact that Bitcoin harvesting and farming has definitely fallen off. But even that was only a 5% deceleration versus, plus 26 on industrial, plus 29 on automotive, plus 18 on communication. They're really accelerating across the board outside of the consumer space. Gross margins were good, operating margins. So the stock's up a little under 4% for the day. I think on average, it's somewhere between a 1.5% and 3% position for most clients, as it's a little bit of a more aggressive tech piece. But really good stuff here in semis, and we've seen some real power the last couple of weeks. NVIDIA has been on fire. It was up 5% yesterday. And I imagine this is probably going to bleed through the rest of the semi space this morning as well.
Yeah, I'd say this is a really good forecast or look through on just the industrial and auto segments. In particular, ADI noted that industrial automation, especially in factories, is like the biggest driver of demand right now, and then also EVs as well. And so for the first quarter, they're forecasting, I wouldn't say strong growth, but they're definitely sidestepping the demand decline that's been hurting the rest of the chip makers. And so this just goes to show how strong ADI is as a business, and that they are definitely positioning themselves strategically in the right sectors for sure. So very, very pleased with them.
Yep. So their commentary, we'll listen to the conference call at 10, but interested to see how much more juice they can get on that stock price just from, tooting their own horn on the conference call. But the commentary attached said, encouragingly, despite the macro uncertainty, demand remains resilient in industrial and automotive, driven by continued momentum across secular growth areas such as automation and electrification. They're just gaining unbelievable market share. Really excited about that this morning. We needed that, as I think we're going to see quite a bit of volatility today, on the back of this retail sales headline. So that's all for today. Tomorrow's a big one. We've got PPI in the morning, which is another read on inflation from the producer side. We've got housing starts, I believe. We've got initial jobless claims. So a little bit of a light news day today, but tomorrow is going to be probably quite a whipsaw, depending on how some of these numbers come in. But I'm interested to see how PPI comes in, because that's been the most quickly decelerating piece. The producer side has come down a lot, which is really more supply chain, and the supply chain can only unwind and clear up one time. Right. So the question is, once that happens, where do we see additional inflation declines? So with that, I guess we'll sign off. Everybody have a great day. We'll see you back here tomorrow, and it'll probably be Harrison and I again, I think, for the rest of the week. We've got a little bit of a mixed mask crew in here today. So we'll see how it goes. See you tomorrow.